Welcome to the 5-Minute Trading Edge brought to you by the Institutional Edge System. Price goes back and forth. Buyers and sellers duke it out. Who on earth is going to come out on top? How many times have you sat and watched as bear candles, bull candles are back to back? You have swings up like this, swings down. It grinds back and forth. Ultimately, someone takes over and assumes control. You just have, as it's developing anyway, no idea who or what is driving price, let alone who's going to come out on top. Well, today we're going to talk about a location strategy you can use to spot who is coming out on top, and it's in the form of buy-sell imbalances. Now, this allows you to see the aggressive forces behind price, and by aggressive forces, we're talking about the institutions. That's right, the guys that drive 90% of the volume that's out there. We want to know who's in control. And just as something like a battle between buyers and sellers is ensuing, we want to know who's going to come out on top. With this information, we can use it to spot trade locations and trade with the overwhelming force, as opposed to guessing and then losing like a lot of retail traders do. At the start of all of this, we need to know exactly what's going on between buyers and sellers. And thanks to order flow sequence tracking, we can see exactly what's happening between the sellers, those that are willing to take the bid, and the buyers, the ones that are willing to pay the ask, and the aggressive moves between the two. Now, what we're looking for are the people that are starting to outpace the rest of the pack. These are the folks that are making really aggressive moves that stand out. This takes the form of an imbalance. Now, here is a perfect example of an individual imbalance. You look at that blue 5 there, it is highlighted because these folks here have a 300% at least size advantage over the sellers. Now, anytime there's a 300% size advantage, one group over the other, that's something that you're going to want to know. And look, sure enough, with this imbalance here, we can see that price is going up. Well, what's better than one imbalance? How about two? Anytime you have back-to-back price levels where one side is routing the other, this is a stacked imbalance. 22 to 4, 21 to 5, absolutely. Buyers are starting to be on the run here, and look at this. Even with this candle going up, even though there might not be a 300% size advantage, we see that the buyers are beating the sellers handedly. 9 to 4, 13 to 8, 28 to 12, and 19 to 9. Stands to reason then that price is going to go up in this instance. It looks the same exact way on the sell side. When sellers are starting to assume control, here it is, a stacked sell imbalance. 3 groups back to back, 4 to 1, 17 to 3, 6 to 1. You bet price is going to respond. It's going down. And look at this. Throughout the candle, 4 to 2, 13 to 6, 31 to 16. That's right, the sellers are in control. So let's see how this plays out over the course of a handful of candles. Now, admittedly, here we have the benefit of time playing out. But for what would look like to a lot of retail traders, price is simply grinding along here before swing ensues and heads down. Here we're able to spot the signs well in advance. And in this case, it takes the form of a stacked sell imbalance. So prices come up here. The sellers have responded. We have 2 right there, and there's another individual one. Now, notice as this progresses, it's no coincidence that this price level and this neighborhood is revisited with support and resistance. So anytime we have an imbalance or even a stacked imbalance, you can count on that for support and resistance and ultimately a reversal. Now see here, as price ultimately returned, it did it at the same levels that we previously visited. So we have plenty of time for this to develop and come in our direction. Ultimately, the sellers stepped in. 4 in a row, that's a big stacked imbalance. And ultimately, we had our chance to go short, trading with the overwhelming force. We know this because we can see it unfold right before our eyes. So as this candle developed here, these folks assumed their positions. We knew this was a level they were interested in. We could go short with them and win. So there it is, spotting a trade location. Track individual imbalances, and when you see stacked imbalances, pay close attention. Watch for price to return at that level. Look for activity, support and resistance activity at that same level. Trade with the overwhelming force when it returns, not against them, and ultimately you'll come out on top. Want to see how you can benefit from buy-sell imbalances? Watch our free 4-part training at institutionaledgesystem.com. You'll find a lot more there. Until then, thanks for your time.